All right, everyone, welcome back to the channel. Thank you for tuning in to another video today. Quick analysis, breakdown, going into the market, looking at the NASDAQ 100. I'm going to switch over to take a look at the ES as well for all those that traded. But so far, today is, we had ISM at 10 o'clock this morning. So I stayed out of the market and waited, but I was looking at the market, kind of the sentiment or the direction of the market. We've been pushing to the downside the last few days, making lower lows and lower highs, breaking structure back to the downside. And then we got a pullback right here, and then we flush back down to the downside. So decent pullback or swing, pushing higher here, taking out some areas of structure to the upside, and then moving back lower. Okay, so we made a low, lower, high, lower, low, breaking structure, and now we're kind of the ties kind of shifted slightly back to the upside here. So breaking some areas of structure back to the upside, as you can see there. And now we're adding this. There's a swing here, a low, a lower high, and lower low here. So this was a major swing right here on the move to the downside that broke structure right here below 17,283, and now we're bumping up against a little swing area on the inside of this major swing right here, a little zipper right there. So small area of resistance right there, but it could be a major area of resistance, in a sense, because this is a higher time frame chart, the 60 range, but. Either way, we're starting to re-break structure back to the upside inside of this swing here. So, say for instance, let's say if the market breaks above 379 here, it could come up and start testing and filling in some of these fair value gaps or imbalances back to the upside. But we are swinging to the upside for all those that can't see it. You can see we got a push up, a high, higher low, higher high, higher low, breaking structure above here at 363. So it's going to be interesting to see what happens today. This right here was around the news event at 10 o'clock, and you can see we pushed up to the upside here. Prior to that, the market opened up around this area right here, so it kind of started, it kept swinging to the downside. All right, so right now, just going to kind of sit back and wait and see what the market's going to do. Is it going to flush? I mean, is it going to start to position itself to keep swinging to the upside today, or is this just going to be a decent pullback for it to push lower and take out the low, yesterday's low, I believe. Yeah, yesterday's low right here, at 17,022. So I'm going to look for, maybe some possible setups in the market or whatever the case is. But as we speak of right now, this right here would be an area of, this is a demand zone coming off of the higher time frame or higher base chart market off the 60 right here. So it could pull back here, reject, and then test the high back up there. So I'm going to wait and see what happens. If it comes back in this area right here, this red line, I'll put it right here. There is an imbalance or a gap back inside of the zone. So it could retest this area here, feel the imbalance, and then maybe want to, at least push up some. But again, be mindful because it's hitting the area of resistance where it could just come back here, bounce, and then retest this area back here where this little swing is at, okay? Now, if it breaks this area here, again, I'd be interested definitely to see, is it going to come back up and start filling the imbalance or gaps right here and right here? So, and then the tops, we would have resistance resting right there. Okay, quickly looking over here at the ES. The ES hasn't done much. I'm not sure what's going on with this market. We had better movement last year, but we're coming out of January into February now, so you can see what happened in January. Not much. Just kept pushing to the upside here and making swings to the upside, making higher highs and higher lows, breaking structure. Okay, and then we got this pullback here and broke through some area structure right here below 48.88. So we made a push to the downside, low, lower, high, breaking structure to the downside. So it's kind of, it is swinging to the downside now. You can see it breaking through some areas. It took out this area here, took out this area here. So, but now it's turning back around and it broke above an area structure right here. So we're going to see 48.94. This right here is a supply zone resting right here, but you got to be careful and be mindful. Like I talk about, always be mindful of what's below you. Even though the price may be breaking structure back to the upside in this case here, right here would be, an area of support. So if it bounced off of here, right below here would be support. So just be careful of if you trade say for example, this area of supply where it could just possibly move back down to and reject from. So, but it's been at a snail's pace, the ES here, and really not, be honest with you, not really any good setups. I mean, and looking at the higher time frame, I'm not saying off of the lower basic lower time frame charts. But I like to mark my zones off of the 60 and use multi-chart confluence, you know, whether it's using a 60 and a 12 to try to get into a trade, or using all three, 60, 24, and 12. You know, the more confluence and confirmation you have, like I talk about in many videos, then the better off and better paired you are for a higher probability setup. So this is a supply zone. The market gets here. It could get here today. More than likely, it probably will. But it could reject this area of resistance right here and just push even lower. So I'm going to wait to see if this is going to tap into right here up at 49.11, and then maybe reject, and then see if it can possibly catch a scalp off that to the downside if it does. So let's wait. All right, as you can see here, we are just maybe a few points, about a point and a quarter, point and a half from tapping the zone. So it's filling in this gap right here in between these candles right here. So, but it hasn't tapped into the zone yet. So I really want to wait more so to see it tap into the zone. But it could reject right here and then come back up and fill some areas in, at least back up here to the 353 possibly. But I'm going to wait it out to see if it's going to come down there and tap the zone here at 32 and a quarter first before taking any interest to do anything. Okay, so I'm into this trade. Looking to take it short. They are testing the back end of this small supporting swing right here off the 12 range chart. And I'm looking to take it down to 34 and a half. And I want to lock my, let's see here. Kind of zipping around. It could come up and test higher areas though. That's the thing about it. It could test this area right here. It could actually test up here too. So, but I'm taking the trade off the rejection off the 12 range chart, and I think I'm going to maybe 1 second here. It's quite tough when you're in a trade and trying to discuss what's going on at the same, well, discuss what you're seeing at the same time. But it was off the, so I'm gonna lock in and put a stop back in this area right here above this supporting swing area, small area right here. I'm hoping it keeps pushing down here. Come on. It looks like it may want to, there we go. There we go. Okay, it hit it. I was trying to switch over to my other chart so you can see it. All right, so let me close that out. All right, and you can see it keeps going. It's pushing lower and lower. So this was in the demand zone. It's invalid now because prices or the market's pushing through it. But I was aiming for, 34, I believe 34 and a half. It was going to pull back off the 12 range chart. Aiming for this area right here. We bounced off this area. You can see resistance over here. So I was taking the trade off of the 12 range, aiming for this area of demand right here. But the market, again, even though this is an untested, well, this is, if you take a look at here, there's an imbalance. There's a, gap back inside the zone there. But when the market broke above here, these bullish candles here, this candle here closed above this last down bearish candle, but this candle here came back and wicked it. So the zone, when I talk about low probability, high probability, this is a lower probability zone only because that this third candle, when it came back, the wick of it filled in back to the demand zone, but there's still an imbalance resting on inside the zone. So there's still a possibility that the market can reject that area, but it broke through it. So that's why I always say you got to look for the confirmation and rejection when the market gets back to a zone. But I was looking to go short, as you saw, and before I could even I was setting up my stop loss on the back end where that small little swing was. So I'm going to put my stop loss there. I was setting it up, and before I could even do that, it already flushed down real quick and hit my profit target. So that's the thing about the NASDAQ. It's a fast-paced moving market, and you can see what it's doing. It's still pushing down. Let me look to see. I don't think we have any more news until 10:30. Oh, it's past 10:30 now. Okay, so that was natural gas, but that was low impact. All right, so let's just pay attention to the structure of the market and see what we have going on. It was turned back around into the overnight session and started breaking structure back to the upside, but now it's kind of folding back down. So be careful when the market starts getting into areas like this. If it starts to break structure back to the downside, that's one thing. You can be possibly looking for shorts. But if it starts to just kind of move sideways inside this area right here without either breaking back and continuing taking structure back out to the upside or continue taking structure to the downside, then you're ranging. So keep that in mind, because right now we're ranging. We'll be ranging. You can see where we're setting the market like it's setting itself up for that, to do that too. So just trade in accordance to what the structure, the overall structure of the higher time frame or higher base chart is showing you. All right, so again, that the market pushed right through this area of demand resting, that zone I had marked right here. This is another demand zone, but look what it's doing. It's pushed deep into that zone. So whenever the market pushes deep inside of a zone, then I'm really starting to really look and not take interest into it, because I like to prefer, and I talk about this, when the market taps, you know, when it has its first tap into a zone and it wicks away from it, that's a strong sign of rejection, that the market is not going to hold, that the zone is going to hold. But if it starts to push into that zone and starts to, you know, deep into the zone at the bottom end of it, say this was the zone right here, then be careful about that, because more than likely that's still enough. There's enough force and momentum of selling into inside that zone to where they're probably going to push through it. And you can see they push through this, push through this. So I'm not sure what's, you know, nobody knows. I mean, what's causing the market to really like push to the downside hard as it is, because this is a lot of selling activity that's taking place right here. But, you know, we just trade what we see in the market. So now that it's kind of breaking through this, you know, area structure right here to the downside, you know, I'd be, you know, maybe, you know, looking for possible shorts. I mean, either that, or I want to see it break back to the upside. Okay, I don't want to be trading in the middle as right now. So if it pulls, you know, if it pushes back up here, maybe there could be a possibility of short in these areas up here. This was supply, lots of selling activity, aggressive selling activity, but now it's, you know, re-breaking structure back down to the downside, which is, you know, so it's either going to break to the upside or to the downside here. So, but I don't want to be trading in the middle. If it starts to kind of start zigzagging in the middle right here, then it's going to be definitely ranging. This was a demand zone resting right here prior to, but as you can see, the market tapped off of it and it did its thing and pushed up. Again, there's a demand zone that was right here, but this was early in the morning, 2 o'clock in the morning. This was at 10, but we had news then, so all this could have been just that push to the upside, driven by the ISM news this morning. Now there is a small zone resting down here at the bottom that it could possibly come down and reject off of. So I'm going to put a right here in this area here. You can see it down here at the bottom, around 241, maybe 240, 238, somewhere in that area there. We could get some rejections. Just have to wait it out. So right now, the market just broke small area down to the downside right here. But again, the market could come up here and test this zone here. This is a supply area. All right, so let's see what happens here. I'm looking at, because the market is slightly bearish, you know, looking at the higher time frame. Now that we're breaking structure back to the downside now, slightly. I'm just looking to see if the market's maybe going to kind of swipe this area maybe. But I'm not sure yet. On the 12 range chart, we have some, you know, equal high formations right here, and then maybe just kind of reject it, you know, somewhere above, close to this upper end of this high volume area, and just move lower, possibly. But gotta be careful here, because the market can just kind of look at the higher time frame. We just broke the small area. We broke this area of structure right below here at 69.5. So let's see what happens. Is it going to swipe above this area here, reject it, and then maybe push a little lower? I'm going to be mindful. I'm going to watch this area. So we broke on the lower time frame, lower base chart. We broke some area structure, small area structure back to the upside, and formed these equal highs right here. You can see. I talked about this in a video yesterday, but that doesn't mean that this is going to hold, though. This thing can push right through. If it closes above, which it just did, then it's not going to hold. You see that? So it's searching for, you know, slightly higher areas, and on the higher base chart, it could want to come out, push back up there, and maybe test that supply zone. So we just have to wait it out. All right, so I'm just kind of just waiting to see. The market's kind of moving sideways on the higher time frame or higher base chart. So I'm just really waiting to see what the market's trying to do as of right now. Just going to wait it out here. I'm on my lower base chart right now. Just looking for, okay, I'm short. All right, I'm looking to take it back down to, all right, grab some area of liquidity down below here, as you can see. So Yeah, let's do this. Okay. And I want to put a stop in real quick, but the market is pulling back on me so quick. So it should run lower now. I'm going to put a, come on. See, I can't even get my stop in. Okay, there we go. Okay, that was a liquidity grab. Just want to show you that, guys. Okay, that was a liquidity grab there. For example, you can see we are bearish. Bearish on the, I'm sorry, on the slightly bearish on the higher time frame, a higher base chart. Okay, we broke structure right here to the downside, and you can see the higher base, a higher time frame chart is chopping right here. So you see that. I like to put my stops in, say for instance, or for example, once I'm into a trade, because the NASDAQ, it moves, you know. So if you got a strategy set up, say for example, maybe you got to set it 10 ticks or maybe 15 ticks or whatever the case is, or you can set it up and put it however you want to. But you're going to have to, move it around once you're into that trade to know where to put it to lock in your stop is what I'm trying to say. Because in this type of setup, we're not trading based off of a supply or demand zone. We're looking and following the structure when it comes to liquidity grabs or sweeps in the market based on what took place once price broke structure to the downside. So if we're slightly bearish in this case here, we were, slightly bullish here, and now we're re-breaking back to the downside here. So my mindset is a little bit bearish at this point. So when I was looking for it, I saw the market kind of re-stepping itself back to the upside here, correct? And as it was doing that, I saw that it formed equal highs. We got push up here, pull back, a high here, pull back, a high here. But it didn't break above this area right here. So I'm going to draw this right above this line. They're equal highs. All right, we've got highs there. Right here, right here, right here. It came up this area here. So that's an area of liquidity, okay? It pushes down. You wait for, I talked about this in yesterday's video, for it to come back to the area. If it closes above that area, meaning a candle close, then it's invalid. It's not going, they've grabbed liquidity, broke through a candle close, which means they're probably aiming for higher areas at this point. But when I see it wick out above an area like this, and then I get the break and close of a candle to the downside, then I'm going to go short and aim possibly for areas of liquidity below. So where could it aim for? Well, we got equal lows right here. It could come all the way down and aim here. Now, what it's doing right now is bumping up, of course, against an area of support off the lower time frame. Could it reject this area and push higher? Of course it could. It's in the middle of a high volume area right now, but I would suspect that it may want to try to push lower and swipe some area of liquidity first before it makes its decision in which direction it's going to move. So again, that's the reason why I got into that trade setup right there. So now what I want to see the market either do is re-break to the upside here or start taking out some further area of structure to the downside. It does still appear that we are kind of in a channel, using off the higher base chart, all right? Still slightly channeling to the downside, even though we're getting decent pullbacks here. I mean, pullback here, decent, But if we take a look at it, just follow the channel. Breaking structure all the way down, making lower lows and lower highs. Okay, then it pulls back right here. Then it pulls back pretty significant, and from here, and then it drops. Okay, lower low, lower high, lower low, and then it pulls back pretty decent here. Okay, taking out this area structure right here. So now what are we going to do? Are we going to continue breaking to the downside here? Again, like I said earlier, break through this area here at 720, or we're going to start climbing back to the upside and start taking out, some areas of structure back up this way. So that's the importance of being able to really follow and understand the structure of the market. Right now, we're kind of moving sideways. You see the choppiness going on, even on the higher base chart. So allow the higher base chart to kind of give you an emphasis on which way to really trade. Again, that last trade I took was based on a liquidity graph setup. It was strictly not based on supply and demand. Sometimes when we're sitting around, I discussed this, when we don't see a area which we can trade from based on supply and demand, then you got to pull something out slightly out the toolbox again and look for a setup. Okay, so yeah, it grabbed this area of liquidity right here and pushed lower, but it didn't push any lower like I thought it was going to do and swipe areas below. It just basically came down to this area of support, but on the lower time frame or lower base chart, this is a demand zone here, so it approached that area there, and that's why it kind of rejected from that area. But not to say that it can't continue pushing lower, all right? But it did tap into this area of demand right here on the lower time frame. All right, so there was I'm gonna show you where there was a long position at. I missed it myself. I'm gonna show you. It was based on the 24 range and the 12 range chart. Okay, so pay close attention here. You can see the market moving lower, right? Now this is on my 24 range chart here, and that's why I like to use multiple charts. You know, the more confluence you have, again, like I talk about, you know, even off of 2 charts, you can step into a nice trade setup. So if you take a look what took place here, the market on the 24 was moving lower. We broke structure here. But then we started moving back inside of this swing, okay? And we started re-breaking structure back to the upside, small areas of structure back to the upside within this swing, okay? So it pushes up, pulls back, makes a high, makes a higher low, okay? And then breaks higher here, taking out, we took out here, and then we have these imbalances you see right here, resting right here, okay? So as the market broke above and broke structure right here on the top end at 294, we could look for a pullback because there is a demand zone. I'm just going to show you real quick. Market right here. Okay, where there is an imbalance or, you know, gap resting inside the zone. Okay, so if you go down to your 12 range chart, this is around 11:20 this morning, just to show you. Okay, and if you look at the on the 12R, the market pulls back. What do we have right here? We have an area of demand. So we have an area of demand off the off the 24R, slightly higher time frame or slightly higher base chart. Okay, and then we have the confluence right here off of our 12R entry chart. See what it does right here? Comes down, taps it. What are we looking for? The break and close of the candle above. Okay, break and close for confirmation and rejection of the candle above and close. Well, basically what I'm trying to tell you is that once it taps into the zone, you guys know this, I said this a million times. The last down bearish candle, we want to see a break and close above it. So maybe you got in, you could have got in maybe, well, break and close, and maybe you got in here at 281, 282, okay? But move down back to your to your slightly higher time frame to see, because we want to trade in the direction or back to possibly fill some imbalances or gaps on the slightly higher time frame. So we want to start off and go back to our higher base chart, because that's the zone where we originally marked at, and then move down to a lower time frame. So once we sized up the market, look what happened on the pullback here. What do you have right here? Okay, what do you have? The market pushed down 1, 2, 3, 4 candles right here. So you have a gap here. You have a gap here, resting back up to the tops. So the market is definitely going to go up, fill this gap here, sitting here at 286, 286 and a half, 287 area, and then also test this area here. But what it likes to do is, once it fills the imbalance, it's going to pull back. Then go back up and fill the rest of that area up there at 289. So if you got it at 280, what did I say, 280, let's see here, 282 right there, and took it up to 289, you grabbed yourself 7, possibly even 8 points right there. All right, now this is not even using the 12R chart, the 60R chart. We got confluence off of a 24R and the 12R chart. Simple as that. So that was a nice area of demand on both charts with confluence. Now what do we have here? We have the market pushing higher. What did I mention was right here? This is an area of supply. Just tap right into it. So let's just move down to a 12R chart to see what we have. Okay. And even the 24. Let's move down to that first and see. Okay, what do we have? Let's see. We have an area of supply on the 24R as well. So there is supply. Okay, highly untested. High probability zone off of the the 60R, 24R, and then even on a 12R, you know, of course, I'm sure if we moved out and looked over here where the red line is at, all right, so it didn't quite tap into the, yeah, even right here. Okay, let's see. Hold on one second. Let me see. Let's see. There's an imbalance resting, small imbalance resting right here. Okay, little area of demand off of the 12R as well. But what I like to do is, if I'm marking my zone off of my 60, okay, right here, I want to see rejection on my 12 as well. Okay, so meaning a structural break or down to the downside and a pullback. But it's rejected. We got confluence on all 3 time frames: the 60, the 24, and the 12. So it's rejecting it. And where could it come down to? Well, if you look at your back at your higher time frame or higher base chart. Well, we see what it does. It can come down here and just, okay, so it could, let's see. It could come all the way back down here and fill this area here at 291, all right, possibly 292 area. You could do that if we reject this. Did we hit it to a tick? Yep. So this is a supply zone. I'm not saying that the market could do and it's going to do what it wants to do. It could break through this area and push higher, but right now we're getting rejection off of it, and I'm not probably going to trade it because I'm looking at it after the fact. So it's more likely it's going to want to test. Let's see. Let's see if it rejects. Come down here and test this. There's an imbalance resting right here. Okay, so let's see what happens here. Let's see what happens. But anything can happen. I mean, right now my time, Eastern time, is 12 o'clock, and if you trade and you have experience and been doing this for a while, you know that the market, the volume is going to kind of drop during this time frame because it's lunchtime, and it could be from 12 to 1 or 12 to 2. Those that are really pushing the market have stepped away, grabbing a bite to eat and going to lunch, and so the volume's not really there in the market. I mean, so meaning the big money, the institutions, they're not in the market right now. So be careful when you're trading. But could it reject this area? Definitely could do so. We could get a rejection, but we're kind of playing in the middle now because we started breaking structure back to the upside and then folded back to the downside. So be careful on what takes place here, because I told you I would like to see the market either push higher here or continue pushing lower. All right, I don't want to start seeing where it plays around the middle. Right now, if it just starts to kind of push up here and start to break a little structure, push up, back and forth, I'm not going to be trading now. I want to see either break above here at 72, or I want to see continue break below here at 260. Okay, so I'm interested. I'm not going to take a trade. I'm just going to see. I'm going to sit back and wait to see what happens here. I've already taken a few trades today. I posted one that I didn't capture in the just a moment ago on the recording over on the Discord. Because what I saw here, I'm going to show you right quick. Moving down to my 24R, as the market was breaking, breaking structure back to the upside here, it broke above this area here at 295 when it pushed up right here. So we had push up, pull back, break a structure right here. It broke above 295 over here. So I waited for, basically, I was looking for the market to pull back to a key area in a sense of demand, and looking for it to feel another area imbalance or gap back to the upside. So it broke here to the upside, okay, pull back, made another swing to the upside. All right, now if you take this trade here, you just want to take it back up to this high right here. But once it breaks structure back to the upside, then you can look for the pullback, look for rejection for it to at least push up, and look for, if it's already broke through an area here and it's tested, say, an imbalance resting like right here where it did. So it broke this area right here. Okay, when it pushed up right here, it tested this area of imbalance right here, pulls back, breaks structure right here, pulls back, look for rejection on a pullback. This is definitely a demand area right here. It did get tapped back into when the market broke this candle. All right, here, this bullish candle, and pulled back to the demand zone, but we have an imbalance resting right there. So there's still opportunity there is what I'm trying to speak on. When the market gets back there, it dug deeper into the zone, so you really have to really move down onto your lower time frame and look for a really good entry point. But anyways, there was rejection. I caught it late, and I aimed to take the market back up to the next area of imbalance, which was around, let's see here, 300, yes. So I'm not sure what's going to happen right here, because we've hit it to the tick, okay? It backed away from it, pushed back up to it. You see this wick here, it's moving more into the actual zone right here, this supply zone resting right here. So be careful, but this is off a higher time frame. Or higher base chart. I'm not trading off my higher base chart. Is it rejecting? So let me do this. I'm just going to show you. Let's draw the zone out right quick. It's this area right here. Okay. Now you see it digging deeper into it now. So be mindful of stuff like that, because in the time frame in which we're at right now, 12 o'clock Eastern time, things can happen. I mean, to where the market just wants to start pushing higher now. I mean, because if you look at the trend, if you look at the slight trend on the higher time frame, ultimately, when we started breaking back to the upside here, look, we were once bearish, now we're breaking structure back to the upside. All right, so we got a channel now to the upside to where we are making higher highs and higher lows, right? We haven't broken this high yet, but we got a push up, pull back, broke higher, pull back, broke higher, pull back, dug a little deeper here, But be careful in this area right here, because this is an area where the market can start to set up or start ranging. So it has to prove to us, let us know, do they want to continue pushing lower, or they're going to start reaching for higher areas. What it looks like now, they're reaching for higher areas because they just broke through our zone. You see it now? You see it? It broke it when it tapped here. The first tap, that's that wick of that bearish candle right there. Let me take this channel off. Right here, okay, you see that where it tapped it right here? It moved away from it. But if you move down to a lower time frame, a lower entry chart, all right, so that was right there at, I'm gonna take this line right here, I'm gonna put it right there so we can see it on the lower time frame. All right, that was right here. Okay, we didn't break any area structure to the downside, we just rejected that area. All right, so I'm not going to be interested really to take that trade. All right, so and you look at see what's happening now. It's breaking right through it. So once it rejected with that candle there, if you got into a trade instantly, just even off the lower time frame, you really didn't wait for a good setup. Okay, and that's why the market it came back up and with force pushed right through that. We got a lot of bullish activity back to the upside. It broke the zone. Now it's invalid. Okay, so in seeing stuff like this now. And what I see taking place, I would say that more likely it's trying to break higher, but I don't know for sure because we have this area of resistance, which it hasn't broken above here, above 380. So in that case there, I'm going to stand down until the market tells me and shows me that it's really, this is invalid now, it's really what it's really trying to do. Now if it pushes higher here, all right, if it pushes higher right here, okay, then maybe it's going to swing back, okay, and test an area of demand right here. So we could go ahead and mark a demand zone. Let's do that because we're breaking to the upside now. This is an area of demand resting right here. All right, is there one below that? I'd be focused on this right here more so than anything. But yeah, there is a demand zone forming right here. Okay, and it could break this area right here, but be careful because we have resistance right here. All right. So be careful. So the market is pulling back now. You can see it. All right, come up, tested this area of resistance, bouncing off of it. You know how the market moves. You know, pushes and pulls, or pulls and pushes. Either way, but it's pulling back. You can see now tapping into the support area. There is a demand zone resting right here, and it can come all the way back down here. And then if it does, then where could it possibly test next? It could come up here and probably test. Well, what it's going to do more likely is going to fill in any areas of imbalances back to the upside. Off this swing that it's making, or retracement swing that it's making. Well, I should say swing on this retracement or pullback that it's making. So if it taps this area, it come back up here and try to fill in any imbalances as it was moving lower. Then it could possibly just push higher and come back and fill in some areas of this imbalance resting right here, or this gap right here, or maybe test up in here. Okay, we're talking about back up to 97 or possibly push higher up into 405. But again, we have resistance right here where the market could stall out at. But this is a demand zone. You have to just wait it out for the market to tap into it and then trade it from there. So, but I'm going to wrap it up here. That's all I'm going to kind of cover today. Just wanted to show you that, you know, you definitely have to pay attention to the structure of the market. I don't care what anybody tries to show you. If you're not a master of market structure, if you don't think the structure of the market is king, then someone is fooling you. So I'm just telling you that you're going to have to really pay close attention to and you know, the structure of the market. Like, and if channels help you out, then draw them. Like I showed you. You know, we had a channel to the downside. Like, you know, oops, sorry about that. Let me move this out the way right quick first. Move this down here, and then we'll redraw it. Channel here. So, you know, just this is off the my higher base chart. We had a channel to the downside. We're swinging, right? But within this channel, you can always also have a channel within a channel. But we're forming a channel back to the upside now, right? So we're slightly bullish back to the upside, okay? But in a bigger channel to the downside, you can see that we're bearish. So the market, what I'm trying to say is going to come down, even though it's retracing deeper on the higher base chart, come down and break structure below here at 220. Okay, but right now, you know, in the intermediate condition of the market right now, because we're breaking areas of structure back to the upside, you can look for a pullback to this key area of demand right here, and look for an opportunity. If we get the rejection, I'm saying, to possibly go long, back up to fill in any imbalances or gaps back to the upside off of this leg that is forming right here. Simple as that. So I don't trade, you know, actual trend lines, you know, off of any type of setup like that, I'm just showing you can use a channel to kind of guide you into the direction. So that's called a trend channel to kind of keep you in a direction. And again, you can have a trend within a trend in a sense. The longer term overall trend, and then a shorter term trend that's happening or unfolding right before you. Okay, so keep that in mind. But that's all I have to share with you guys today. I posted a few of my trades over on the Discord community. So if you're interested in joining the Discord, you can find the link down in the description portion of the video. And you know, it's free. Okay, come over and join us. Total for today, I just scalped a few trades, 189 when it comes to ticks, because I like to see the number of ticks and cumulative when I trade it. But that's going to pretty much wrap it up for me today. I appreciate everyone tuning in and support the channel. Those that are loyal supporters here on the community. But that's all I have. If you haven't subbed already, subscribe. Please take the time by clicking on the sub button down below. You know, I'm going over within these videos as I'm trading, and a lot of people don't do this where they're actually trading and breaking things down, you know, step by step as things unfold in real time. So I'm kind of giving an analysis at the same point of what is unfolding, real time, and discussing in detail why I took those setups or whatever the case is. But yeah, if you haven't subbed, go ahead and click on the sub button now. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please drop a like on the video if you found value in the content. I'll see everyone in the next video. Take care.